Said, we're going to be going over the day trading strategy that I've been using recently. I would say like the last 5 to 6 months, I've been using this strategy and it's helped me find a lot more consistency in my day trading. Yeah, Boeing was a banger. I low-key was trading that. It was nice. But yeah, so the day trading strategy I've been using, I talked a little bit about it last night in the Team Bull webinar. So if you guys were in there, you heard a little bit about it. However, there's more that I wanted to add on to it. So kind of just going back to the strategy that I was using last year, and then, you know, previous years, it's pretty much been the same strategy, except last year was more of breakout trades, and then trades in the past were more so just basic moving average bounces and using a squeeze looking for an upside move. And going into last year, a strategy that we used a lot was known as the orb strategy. Again, I'm sure most of you guys know this, but pretty much what an orb is you take the first 5 to 10 minute candle, and I'm going to try to do my best to be good at drawing, but say this is the opening 10-minute candle right here, right? What an orb is you mark the high and the low of that opening candle. And what I would do is I would watch for this thing to kind of trade in a range, you know, whether it be 5, 10, 15, 20, 30 minutes, however long it took. But as long as it traded in this range, the setup was valid to me. Now, using moving averages, TTM squeeze, yes, I am recording. I'm recording on OBS Studio. But, hey, you're late, but you're here. Okay. But using moving averages, TTM squeeze, and all that stuff, you have a good understanding of this, a 5-minute chart. You have a good understanding on which way you would ideally like this thing to break out. So I have a bunch of examples that I could show you. Hold on. Let me pull one up real quick so I can show you after I show you this example. But what we would look for would be the stock to trade in between the range. Again, using indicators. Is it going to break down or is it going to break above? If it were to break above, I would be watching level 2 for the entry. And last year, when we traded this, we would see huge continuations to the upside. I don't know if any of you in here right now were with us in Team Bull early 2022 and even 2021, but this strategy worked. Literally, this was like the only thing I was trading every single day, and it worked. But last year, here's a good example. Hold on. There we go. Here's a good orb example. So here's the high, here's the low. It traded in between the range, and eventually it broke above, and that's when we got long, and we call it a nice move to the upside. Yes, orb, very popular, and we literally would print off of this every day. But going into, like, I would say the second half of, not even the second half of 2022, I would say probably like in April or May in 2022, it really didn't work as much. So it led to a lot of false breakouts, or the move just wasn't that big. And so I started to look for a different trading strategy, different day trading strategy, because honestly, I was getting super frustrated. Here, hold on. Super frustrated with the fact that I was getting these false breakouts. And the other thing being that with an orb, you really don't have a well-defined stop loss. So with this SQ example, the orb, once it starts breaking above here, you really can't say like, okay, my stop loss is at 106.50. Like, you kind of can, because it would start breaking below VWAP, but that's a really big risk, in my opinion, for a day trade. So if you want to become a profitable trader, what we need to do is we need to identify low risk, high reward setups, and literally just trade those over and over and over again. So the orbs, they were higher risk, but higher reward. And I didn't really like that, just because the times when I did have a losing trade, like it was a pretty big loss. So I started looking for different strategies, and just randomly one day, I don't even remember what the trade was. I think it might have been Spire QQQ, but randomly one day, because I've known how to use Fibonacci retracements. I use them on the higher time frames. And one day I was just like, okay, well, the stock shot up in price. It looks like it's pulling back. Let me take the low to the high. And what ended up happening was it started trading back down. and it came down to the 61.8. I was like, all right, I'm gonna try it here. And this thing literally exploded. So I had a beautiful trade just based off of a 61.8% bounce. So I was like, okay, that's pretty cool. Let me try it again. So I believe it was the next day, actually, the same exact setup. It shot up in price. I used my Fibs, came down to 61.8. I was like, all right, I'm gonna try it again. Boom, another green trade. I was like, okay, let me see if there's a strategy that I could not create, because obviously a lot of people use this, but a strategy that I could form to help me find those low risk, high reward setups using that 61.8, and then having my stop loss literally right below the level. Started playing around with this strategy and was hitting, you know, some nice green trades. And over time, I've slowly built up the strategy to kind of break it down into a super simple way to understand it, right? So if we just zoom out, again, this is going to be based on Fibonacci retracements. Stock is in an uptrend, right? We're setting higher highs, higher lows, higher highs, higher lows. What we can do is, because a lot of newer traders, I would say, is they start chasing the move as the stock price is going up. The more that the stock price goes up and you're chasing it, the lower the probability is going to be that this thing continues to go up. The way that I look at trading setups is kind of like professional blackjack players, right? People who know how to count cards. When they know the probabilities are on their side, they bet big. When they know the probabilities aren't on their side, they bet smaller. So I kind of bring that to trading as well when I'm looking at movement. So if we're looking at this, it's going up, 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 up. The probabilities of it continuing to go up without a pullback is now getting lower and lower, if that makes sense. But when we get that pullback to set, you know, whether it be a higher low or in a downtrend, a lower high, that's where the highest probability is going to be, especially if we can find where this level could potentially be. So if you're looking for bounces, you're taking a low point to a high point. So in this example, here's our low, here's our high. You don't know that this is the high until price starts pulling back. So in this example with SPY right here, you can see how we have this high point to this low point. You wouldn't know that this is the low point until SPY started coming back up in price. So same example here. So what you would do is, if you want to find where this low point is going to be, you would take the clear-cut pivot low to clear-cut pivot high right there. Let me tell you, if you guys were in the webinar yesterday or the webinar earlier in Team Bull, this is what happens when you trade a lot. You literally draw like a drawing just like this, and you can visually see where that 61.8 is going to be. I've literally nailed it so many times in a row. But as price starts pulling back, we want to start watching the 50% and the 61.8% for a potential bounce area. Now, the reason why I use these two levels is, like, yes, we can use the 38.2 or the 23.6. In my opinion, those are a lot lower probability bounce areas. So when a stock is trending, again, higher highs, higher lows, or lower lows, lower highs, typically what you're going to see, or those pullbacks, I would say a majority of the time line up to be 50% or 61.8%. And why 61.8% is so important is because that is the last possible spot that a stock can retrace to before it's no longer in an uptrend. So if you were to take a 61.8, and again, it came down to it right here and it broke below it, it's no longer an uptrend. It's more than likely going to shift into a downtrend, and it's going to start setting lower lows. So that's why that 61.8 is so important, again, because it's the last possible area that a stock could retrace to. So same thing to the downside, right? Say we're looking for rejects. Lower lows, lower highs, lower lows. If we're looking for a reject, again, the lower that this thing continues to trade, like say it's trading straight down, the lower the probability is going to be that it continues to go down. Eventually, we are going to get a pullback, and what we want to do is we want to know where that pullback could potentially be to find a low risk, high reward setup. So again, you need that clear-cut pivot high to clear-cut pivot low. You do not know this is the low until we start pulling back up. Same thing right here. So what you would do is you would take the high to the low right there. And then you would be watching 50% and 61.8. And I'll break down the price action that I'm watching when we start getting into these areas. So that's how I'm finding these low risk entries, simply just using Fibonacci. And then I'm also looking for Confluence on multiple time frames. And if you guys ever got questions, type them in the chat. I'll try to answer them while I'm teaching. But I'm also looking for Confluence. Maybe there's a 1 hour 21 EMA right here, or maybe a 10-minute VWAP and 8 EMAs right here. So if there's multiple confirmations hinting to that area, it makes it higher probability that it's going to reject or bounce. Multiple time frames. As long as there's a clear-cut pivot high, pivot low, that's I'll draw it. But the higher the time frame, the more important it is going to be. So a monthly fib, for example, so much more important than a 5-minute. You're likely going to see price action. And I give you a really good example of this actually. So if we zoom out to the monthly time frame for SPY, I have the proof and everything. I have a video the day before this happened saying the two most important levels for SPY and QQQ. I believe, I think it was 350 was the level. But if we zoom out to the monthly time frame on SPY, that morning we had CPI and PPI, or it was CPI or PPI in the pre-market. Market sold off substantially right down into this fib. So what I did was I took the COVID low of March 2020 to the all-time high at 479.98, and I had this 50% fib at 349.12. So as we got that CPI and that PPI, or CPI or PPI, and the market was selling off, everybody was bearish. And I had this video from the day before saying that 349.12 is going to be super, super important for SPY because this is a monthly fib. Therefore, we're more than likely going to see price action when we get there. So going into the market day, everybody was bearish. I kid you not. Everybody was looking for puts. I feel like I was the only one saying that, no, I am bullish. And I mean, if you guys really want, I could pull up the pre-market watch list from that day and show you. But I was bullish because this is a key area. And look at where we opened. We opened right on it, dipped below by $1, and went straight up to 367.50 that day. Insane move. No, I'm not only using it on the monthly, I'm using it on all time frames. It just depends where that pivot high, pivot low is. And again, I'll show you some more examples, but that was just one example. So, trying to think how I want to go about this. Yes, exactly. So, yeah, that's just one good example, right? So, again, I have a lot of people asking time frames. How do you know it's a clear-cut pivot high, pivot low? And it's kind of hard to explain like how to know it's a clear-cut pivot high, pivot low. So I'm just going to show you guys how I would draw it, and hopefully it helps like click. But so say, you know, we're looking for a bounce for SPY. So say we're looking for this pullback, right? And we want to know where a potential bounce is going to be. This is a low point. This is a low point. This is a low point, right? These would be the lows that I would be taking. And this is the high right here. So what I would do is I would start taking low, high, low, high, low, high. And I would be looking for potential bounces. Now, just because it comes down to the area doesn't necessarily mean, yeah, I posted it on Twitter, I posted it on Instagram. But it doesn't necessarily mean that I'm getting long as soon as it comes to one of these bounces, because it could simply just break below it. As you can see, we broke below here, started to finally get some price action here, and that's kind of what we're sitting on right now. But if we start breaking below here, why are people unmuted when they join? But if we start breaking below here, our next high probability area for a potential bounce would be 371.94. Or what about to the downside on SPY as it was setting lower low, lower high, lower low, lower high. Gonna have to keep muting people. I don't know what's going on. So we're setting these lower lows, lower highs. What we can do, high point, let's say we're taking it all the way down to here. High point, low point. As you can see, we came up to the 50%, rejected, came down, had some price action here, and started coming back down. So these could have been profitable day trades right here. This could have been a profitable day trade. This could have been a profitable day trade. So high, low. You also have another high, low. As you can see, right to the 61.8, smacked it, rejected, came back down. Lower, or not lower, but could have even used it here. High, low. Now, I know, for real, we're being invaded. Do you guys still hear it or no? Is it gone? We good? All right, cool. I kicked that person. But what was I saying? So here's the other thing too. And I don't really know how to word this, so I'm going to do my best to try to figure out how to word it. You see like the distance, or like, I guess the time that I'm taking here to here. I don't know how to word it. It's a longer time period. I'm taking here to here, right? This is going to be more important because it's a longer time period, just like you're doing it on the higher time frames, right? So like if you're using a monthly fib, that's going to be very important. If you're using a weekly fib, very important. Using a 5-minute, maybe. But just the distance between where I'm taking these, that's the best way that I can explain it. It's more important because there's that longer time period. So this 61.8 right here is way more important than this 61.8 right there. What's the difference by putting the Fibonacci low to high and vice versa? Again, it depends if you're looking for a reject or for a bounce. So high to low is for a reject, low to high is for a bounce. So that's kind of just how I go about drawing them. Again, I'll break it down to smaller time frames. So a trade that we actually ended up taking today, and it wasn't the most profitable position, but it was still a green position. You could have made money off of it. Was this bounce right here that I ended up doing on SPY. So the way that I ended up finding this bounce was, first off, I'm always watching both sides of the market. I just want to know where possible rejects and potential bounces are going to be. So if we're looking at SPY, there's no good rejects right now. Taking this high to low right here, we have nothing till 394.50 and then 399.1. So, okay, I don't have a solid reject point there. I could take this high to low right here. Again, nothing till 390. I could even take this high to low right here, but you can see we broke above it, so that's not valid. So I don't have any good reject points right now. But what we did have was a potential bounce. So I took this low to the pre-market high, and then this low to the pre-market high, and then I also took this low to the pre-market high. Again, this was all happening before the trading day opened, so ignore everything to the right of here. And you can see that we actually got confluence. So two different areas of Fibonacci points. So what was it? This low to high and then this low to high. We had two Fibonacci points line up at the same exact spot. So today in the Discord, I told everybody my higher probability bounce area was at 361, or is that 81? 381.65. So now, once I identify potential bounce areas or potential reject areas, I'm watching the smaller time frames. So 5-minute, 10-minute, and then ideally, or not ideally, but I'm sniping my entry based off of a 1-minute time frame. So as we can see with SPY, now this is where the probabilities come into play. So when we're going into a reject point or even a bounce, I'm looking for a big move into that spot. So again, if you go back to what we talked about at the beginning, the stock's not going to go up forever. It's not going to go down forever. More than likely, we're going to get a pullback, and we can profit from that if we can find out where this point is or this point is. So we had a huge move going down into the bounce area, which then increases the probability that it's going to bounce. Now, again, this isn't the best example. I can pull up screenshots of trades we've taken in the past based off of this that did a lot better. But hold on, let me pull one up. 1 second. Let's find a good one. This one. So this is a really good example of one that we ended up taking. So as you can see, I took the opening low to the opening high. And then what am I watching? 61.8. And then what ended up happening? We had a nice pullback. Again, this is basic uptrend, higher high, higher low, higher high, higher low. So we're looking at that 61.8. What happens? Right down to 61.8, reclaims it and pushes right back up and then continues to grind into a new high a day. And I actually think it went higher into like 385.50 or something like that. It was crazy. But with this one today, I actually ended up getting a slightly early entry. It didn't give me exactly what I like to see, but the reason why I entered this trade was because of this huge sell-off right here. So price pushed all the way up to 386.50 and then flushed all the way down to 381.65. Yes, these are my settings right here, if you want to take that. But we flushed all the way down into this spot right here. That, for me, increased the probability that we would bounce. So now from there, I'm watching the 5 minute, I'm watching 10 minute, I'm watching 1 minute. As we started getting super close to that level, I specifically said, I'm taking a small size. Reason I was taking the small size was because it didn't give me exactly what I was looking for yet. And I planned to add to the position, but unfortunately it didn't give me exactly what I liked. So I just remained small size, didn't add to it. And as we can see, I mean, it gave a nice little pump, enough to be, a profitable position. Contracts moved like 10-15% for tomorrow's expiration, which that's not ideally what I look for, but it was still a green position. So it ended up pushing from 381.65 up to 382.58. So pretty much $1 to the upside. And my risk was like 20 cents. So that was a 5-to-1 risk to reward, which is fantastic. 5-to-1, meaning you're willing to lose $1 to make 5. So substantial risk to reward. Now, say it ended up bouncing and grinding all the way back up into high a day, we were risking 20 cents for it to go all the way up here. Now, why, let me figure out how to word this. I don't simply cut the position just because it breaks below 381.65 or right below the 61.8. What I ideally look for, again, if we pull up this example, this is my bread and butter right here. When we break below, when we break below that 61.8 and then reclaim it, this gives us such an amazing risk to reward and a very well-defined stop loss. Because when it breaks below and then reclaims it, I give myself about like 20 cents below the low of that candle. Or I have another example to the upside. Hold on. Let's pull up this example too. I'll show that one to you guys. Boom. I mean, we even got another one right here. Boom. Those are all bounces. So I do have a reject. I just got to find it. Hold on. One second. I didn't take a picture on the 1 minute. But we'll look at that one. That one, it hit the spot right to a T. I think I skipped over it. Oh, well. Either way, the rule is the same for what I look for. So if we go to this example, again, breaks below, reclaims, my stop loss is right below this, the low of this candle, give or take like 10-20 cents. And then we caught this massive move all the way up right near 385. So let's just say that we entered at 381.20. Stop loss would be like 379.9. 30 cent stop loss. And this thing went all the way up towards 385. I'm terrible at math, so I'm not even going to try to do that. But you guys can see the risk reward there. Again, same thing here. This one was actually based off of a 1 minute fib. So again, I'm using multiple different time frames. It just really depends where the pivot high, pivot low is and when I get this exact rule. So as you can see, low point, high point, we had news. I think it was I forget what it was. It was like 10 o'clock news. Yeah, 10 o'clock news. Pushes up, starts pulling back very quickly, low, high, and then it pulled back, slightly broke below. I watched the volume, watched the level 2. Buyers drove the price back up. Boom, we got long. Stop loss right below the low here, give or take 10, 20 cents. And you can see right up into 385. So pretty much a $2.50 move if we're just going off of 382.50, and then stop loss at like 382.10. So risking 40 cents to make $2.50. Yeah, Fibonacci's out of place. I'll just look for a different setup. That's why having multiple different trading strategies is the way to go. But honestly, there's been so many different fibs that we've been able to watch and identify levels of bounces or rejects that I haven't really had to take anything outside of the fibs. Besides just like basic breakouts. Again, like Boeing today was a basic breakout. Or maybe, you know, I'll flip over to prices holding the 8 EMA and 21 EMA and VWAP. It has a light blue momentum squeeze. So that's why it's important to have multiple strategies. But this has just been like the main strategy that I've been using. So that's another good example. Had this other one right here. These were longer term fibs. As we see, SPY came down into the level pretty much right to the 61.8. There was also the 50% right here. Broke above, reclaimed it. We got long. This thing nuked all the way up into 370.3. And then ended up coming back down and hitting the stop loss and profits. So there's that one. And again, I use it to the downside as well. So in this trade, you can see that I took this 3-minute fib from high, low, came up into the area, and this is where Confluence came in. The 61.8 was right here, and then the 5-minute 8 EMA was right here. So we have two different things telling us that this is a good reject spot. That's where we're going to look to get short, and our stop loss would be right above like VWAP. And then as you can see, it started trading down, set the new low a day. Absolutely beautiful. So those are those examples. Hold on. What is the EMA that you trust the most? 8 EMA and 21 EMA are my go-tos. But yeah, so I would say the most important thing with this is, again, you need to find those pivot high, pivot lows. Like today, I don't think today actually gave any good, solid intraday pre-market, or not pivot high, pivot lows. Let's see. Nope, not there. Nope, not there. So today actually didn't give you any. But sometimes it's just like that. Other days it's going to give you amazing pivot high, pivot lows. So yeah, I mean, that's pretty much how I use the strategy to identify the pivot high, pivot low. It kind of falls back on ABCDs. Oh, somebody literally just said ABCD in the chat. If you guys are familiar with ABCDs, you know, A, B, and then we get pullback for C, continuation to D. We can use fibs to find where point C is going to be. Boom. And then we look for the continuation, stop loss right below it. For your just a trading gap, no. Market likes to fill gaps. So if it breaks above, I'm looking to trade it up into the gap fill. But yeah, that's a strategy. Never taught that before in that much detail. Hopefully I did good. If you guys got questions, feel free to ask. And again, this was all recorded. I'll upload it tomorrow. So this is the first time that I've been teaching this Fibonacci class. Let me know if you guys found value. There we go. I like it. I like it. Found some value. I love it. So I'm definitely going to be doing more of these webinars in the future, breaking down the Fibonacci strategy. And again, thank you guys for tuning in to the Zoom and learning all about it.